Support and resistance. Support and resistance is found in any type of market, whether trending or ranging, and support and resistance is the main aspect of all technical analysis. When you hear market analysis talking about levels, those levels are support and resistance levels. Not knowing where support and resistance levels are located could be a big issue with your trading. Trying to take a long position or a short position and not knowing that you're up against a support or a resistance level could be a reason why your trade does not work for you. Support is a price level where buying, demand, exceeds selling, supply, and price stops or reverses in a downtrend. Support is like a basketball bouncing on the floor. When it hits the floor, its direction is reversed and the ball bounces the opposite direction. Resistance is a price level where selling, supply, exceeds buying, demand, and price stops or reverses in an uptrend. Resistance is like a 6-foot man sitting in a 5-foot room and then attempts to stand straight up and boom, he's knocked back down. Support levels are beneath the market and resistance levels are above. Traders also reference these levels as supply and demand zones. This idea comes from the fact that at support, price is low and therefore drives up the demand, and while at resistance, price is high, which lowers demand and drives up supply. There is a distinct difference, and we'll learn more about supply and demand levels in our supply and demand module. So for now, we'll just focus on the support and resistance levels. You can identify support levels by looking at your charts for a series of low bear fractal points where price falls to this level and fails to fall any farther. This will be identified as support levels. And here you can see, shown by 2 arrows, the support level. When you find that price rises to a bull fractal high and fails to move any higher, then this will be a possible resistance level. You can see the bull fractals, and price failed to go any higher. Finding and drawing support and resistance levels. When drawing support and resistance levels, you need at least 2 points of contact where price has bounced. A point of contact will be identified by bull fractal points for resistance and bear fractal points for support. The more contact points a line has, the more significant the level. Since higher time frame levels hold the most weight and offer the best perspective on the most relevant levels, we will always draw the daily support and resistance levels no matter what time frame we are trading. A question that always comes into play is, should we draw the wicks or the bodies? We'll start by drawing the bodies, and then if you find there are many wicks protruding above your level, you can draw a second line and make this a zone. What I do is draw from the bodies to the wicks with my rectangle tool and make this a colored in zone. So the rule to drawing support and resistance levels will be to start with a daily chart with at least a year's worth of data. Start drawing your levels from right to left, starting with the first relevant support or resistance level found on your chart. This could be a relevant bull or bear fractal, high or low, a consolidation level, or a range level. Start looking left to find where the levels line up with other support and resistance levels and match those lines up. The more relevant levels will be levels where it is both a support and a resistance level. At times you will find your levels are not exact, and the reason is because support and resistance is an area, not a level. It is best for us to look at charts to see exactly how I draw my levels. So let's go look at some live charts. All right, so I wanted to use live charts to show you how to really find your support and resistance levels rather than using a PowerPoint slide. I think I could get more in and tell you more. So let's look at this live chart of the Euro-US dollar. Now, what I'm going to tell you are the outlines for really understanding and drawing your support and resistance levels. So I believe that you should always have your daily support and resistance levels on your chart no matter what time frame you are trading. Now when you go down to a lower time frame, if you're trading on the 4-hour or the hourly or whatever, you could put in some of those levels, but you always want to make sure you know where the main support and resistance levels are from the daily. And then you don't want to overcrowd your chart with tons of support and resistance levels, and I'll show you what I'm talking about, because then they don't become as relevant. And then we want to look at which support and resistance levels are relevant. and how much of data we should be looking at. All right. So first of all, let's see how much data we should be looking at. This is the daily time frame. So we're looking from here currently where the market is in June and down to March, which is 3 months. So that's not quite enough. You want to have almost a year, at least a year on your chart. So we go back to, this is a year's worth of chart right here. All right, so I'm going to show you basically everything I do is from the left. Now I'm going to draw the extremes from that 1 year point. I'm going to use just the bodies first, and I'm going to show you why I'm doing that. So we go with the bodies. First, we're going to draw the extreme levels. That's an extreme level, and this is the next extreme level. So those are the extreme levels, and prices between those two extreme levels. And then we could start breaking down and finding the other levels. All right, so the next level I'm going to look at is this base right here. All right, so I'm going to draw it, and then I'm going to see where it lines up as far as what's on the left of it. And you could see I drew this level here, and then you could see where it had a bounce here, and we have some bounces here where it's support. Now it looks like a little zone here, and when we get into talking about supply and demand, you'll see that this was a strong supply zone right here, and then the market took off to the downside. But we still have this as a support and resistance level, and I didn't see this level to my left. I drew this level in, and then I went to the left to see if it lines up. Now you could also just leave your chart out like this and find levels that automatically line up, you know, from your left to your right, that want to line up all together. All right, so you could see these levels line up pretty much here. But then I don't want a ton of levels on my chart, right? So I'm going to take some levels off of my chart. One of the levels will be this, all right? And then I'm going to go to my next level, and I'm going to draw in the most current extreme. All right, so the most current extreme is going to be with this fractal level here. Now I just drew it in from here. I didn't see anything else, right? So we just drew this level in, and then let's see what it lines up with over here. And you could see way over here, it was nice support and resistance. So it was a support level here, and then it was a little bit of resistance here, support here, support here. So you want to find a level, and then way back here it was support. So I drew this level in from here, what happened currently, and you could see if we go all the way back here, over a year's worth of time, we bounced on this level in January 2015. All right, and then we hit it again here in May 2015, and then all these levels here, and then hit it again up here in July 2015. And then we had a bunch of levels there that were hit. But this is all just from drawing this level in here. So now I also want to find levels where it's going to be support and resistance, okay? So I want to find levels where I'm going to have support and resistance on my chart. So these are all resistance levels. You can see it's a resistance level. And then there's support here, and then resistance here. This tells me that it's a stronger level. So this is support, more support, and then down here it was resistance. Then back up here, and then we quite missed a little bit here. So I don't like to put a lot of levels in my chart where price cuts through that level. So if I put a level in and I find that price is cutting through it, so I'm looking at this level right here, so I'm going to mark it. So I mark this level, and I see that it has a hit here. Price didn't honor it at all there, nor here, nor there, nor there. Now back here, based off of this level, price honored it as support and resistance here. It went right through, but it was resistance here. And it wasn't a great level back here. Now you could see back here there was some nice support. And again, remember, support and resistance is not this level here. It's this area here. So therefore, some of these levels won't line up perfectly. But since I made this level right here and I see price is no longer honoring it, you could see a big level, a big candle went right through this level. I'm going to take it off of my chart. So I really want to have levels between price where I am now. So this level is not relevant to us at all at this time, right? But this level may be more relevant, and this level may be more relevant. So on my daily time frame, basically that's all I'm putting, because I don't want, if I put anything else, let's see, between where price is now it'll pretty much be too close to that level, and I don't need it. Then it's cutting through my price. Then if I mark anything here, I already showed you that. And if we go here, we're cutting through price again. Go here, we're kind of close, and we don't really have to have that level. Let's see what kind of a level it is. We'll leave that there because we had to move here. So we're going to leave this level here. Okay, so we have 1, 2, 3, 4 levels from the daily time frame, 3 above us, 1 below us. Let's see if there's anything more relevant below us. All right, so we're going to mark some levels below us. Now I'm working from this level right here. And then I want to see if it's relevant here. It is relevant there. We marked it from here. Now we look to the left, and we got a lot of price cutting right through that level. Back here it was really a good level, really strong level. And then here price just cut through it too many times. So it's a level that I could take off of my chart. I really don't need it. Price didn't honor it here. It did start to honor it here, so maybe we can leave it because it showed that maybe it's a little strong level here, but we had not big news bust through that level. So let's leave that. So we have 3 levels above us, 2 levels below us. So we're between the market. And now when you go to your 4-hour time frame, so if you're trading your 4-hour time frame, now you have levels that you can look at and look for the market to go to. Now a lot of times you have to adjust your levels. You could see this level here. All right, so when I go to my 4-hour time frame, I have to adjust that level and move it right to the wick. All right, and then some others may be off a little bit. Okay, I'll move this down to here. So you adjust your daily time frame levels that you marked and get those to line up better on your 4-hour. So now I have a lot of levels on the 4-hour that I could look at. And if I wanted to draw some more levels in based off of the 4-hour, I want to make sure I know that they're 4-hour support and resistance levels. So sometimes I'll draw them a little bit different. So maybe I'll put a line here, then we'll make it a line like this. And then I'll know that's a 4-hour support and resistance level. Now it's not a level that I really like. Let's move down here. See this. Price didn't honor it at all here nor here. It was strong here. We honored it here. We're cutting right through it right now. So let's leave it on and see what it's going to talk about. Then we're going to look for a couple more levels. We're not going to put too many levels on our charts, okay? We don't really I don't put any 4-hour levels on my chart between my daily because I like to see price go to the daily support and resistance level. But I marked the level here, and I'm going to move it down because I have this level right here. So now we're bouncing. You see 2 nice bounces here where this was resistance, and then up here it was support. So this level, then here it was not really honored super great, but remember it's an area, so it's not just this level, it's this area. Now you can see what price is doing here where we have this level. So I'm going to pay attention to it if price comes back to that level. So I'm going to leave that there. And then I believe that's enough on my chart. I know these are my daily. I don't want to get too many lines on my chart where I'm getting confused and not looking at stuff. Now for me, a lot of times what I'll have on my chart is this. And that's it. I got these from the daily, and I'm looking for price to go back to these daily levels. All right. So a lot of times when I mark a level, it can't be just a level. It has to be a zone. And so what I do here, I'm going to show you how I get a zone. So first of all, we have 2 levels that we marked. We marked this level and this level, and it was based off of this candle here, but we see what's happening here. So we're going to make a zone here. All right, so if I draw this, and this one's not a super great level to show you because we have another zone right above it. So let's see. Let's still just do it this way. So we'll do it this way. This will be the zone. All right, and the way that I'm getting the zone is because support and resistance levels I draw with the bases and the wicks. So if it's a big wick, I'm gonna draw that level and I'm gonna make it a zone. Okay, but if it's just if the wick's not that big, like maybe these little wicks here, I'm not gonna draw it as a zone. But if I get a wick that has something like this, you know, definitely like this, I'm gonna draw it as a zone. So when I see that level, I'm going to draw this as a zone like this, and what I do is hit the base and then hit it right on here. And then I can extend it easy with FXCM, so what I do is extend it to 2000 and then to 2020. Alright, so that'll extend that line for me. Now that's my zone. So you're going to learn how to trade these support and resistance zones, and you're going to get these zones all the time when you have certain levels with big wicks like that. So you're going to learn to follow these levels. Now you can see this is the bottom of the zone. Alright, and at the bottom of the zone you could see over here price came and hit that bottom of the zone. Alright, and then price never really went into the zone and then fell to the downside. Now down here I would have marked this maybe a zone, and if I was looking at that zone I would probably mark it like this, because I have that wick down here, and then I would extend it farther. But you can see I have this wick. Okay, so I want to have, this is the support level here, but then you have a wick here that follows even more, so I know price can move down into that zone. Now a lot of times I don't want a zone that's 100 pips wide and stuff like that. Alright, so let's see, how big is this zone? This zone is like 80, almost 100 pips. So you don't really want zones that are super big, you know, because when you go down to the 4-hour time frame, what's going to happen when you're trading that zone, now price could go all the way up into that zone, 100 pips into that zone, and you really get confused. But really, the best thing to do is to look at this zone and watch what price does at this zone and in this zone. Because if we're trading this zone, and I'm going to show you just a little bit what we do here. We can mark this level where we want to enter the trade. So the green level, the green line is going to be my entry. As price moves up, so suppose price here moves up, and we're going to draw it. As price moves up into this zone here and comes up, bounces around, bounces, and maybe comes up in the zone, now I'm very interested. Alright, so what I'm going to do now, when price comes up into that zone, I'm going to move my entry from here to here, because we can trade this zone and we want price to drop back down and bring it, trigger us into the trade. Now with a 100 pip zone, you want price to get as far up as possible because you want to eliminate some of that 100 pip zone, but we don't want to get zones too much bigger than that. Alright, but you could see where the wick is, and based off of that wick off of the daily time frame, we would have to mark that zone as such, because now that lets us know that price can move up into that zone. Alright, and then if I was marking, if we didn't have this area here, we would definitely mark this as our zone. Let's see, what's that level here? This level's about 116.15.8. Let's change the zone. 15.8. So now if I'm just looking at my left here, and I'm going from the left here, I would see this is the zone now. This would be the zone for me. But really, we do have this here, so we have to put that zone. But I'm just showing you exactly how I make zones. Now, I'm not going to have a ton of zones on my chart. I'm going to have the most extreme levels as zones. I wouldn't mark this down here as a zone. This would not be a zone for me, where you see this wick right here. All right, down here I would make the zone. When there's nothing to my left over here, this would be a zone. So, nothing to my right, I would make this a zone. So let's remove that. If there was no price past this point here, or even if it was down here somewhere, the next thing I'm going to do is make this a zone. Okay, and this is not a tested zone. So you want to make sure you know that. So what you do, a lot of times what I do, so this is the zone here, and it hasn't been tested until the price comes back here and hits it. All right, so from when I first draw this zone and I don't see that it's been tested anywhere else over here, okay, so if it was an extreme level and it's never been tested, then I'm going to make this zone green. I'm going to make this zone maybe green or red, but when it's a good zone, I'm going to have it yellow. All right, so you want to make sure you know that, and even when you're drawing your support and resistance levels in, so if you draw a level up here, suppose this is the highest level currently, and you go far to your left, and there's not much over there, so you don't see anything to your left, and you make this level, and it's not tested, maybe you want to make it a different color, so that you know that it's not a level that's been tested yet. And that way when price gets to it, then it tests that level, then you know it is. But when you draw your support and resistance levels, you want to draw from right to left, so that way you're going to have a tested point. So I have a point here and a point there. That's 2 points. So now when price gets to that point, I don't have to worry about if it's tested or not. So don't put yourself through the trouble of trying to determine if a level is tested or not. Once you mark it, make sure there's other levels to the left of it. Now, the only way it's going to make a new level is if it's going to be much like this. So what I do on my monthly time frames, I use those a lot too. Now, I use those for extremes. You're going to use these for extreme support and resistance levels that you want to know, because you want to know the all-time high and the all-time low. So the only time these are levels that might not be tested is if it's the all-time high or all-time low. So remember what I was telling you. This chart is the all-time of this whole price. So looking at this chart, this is the all-time high here. There's never been higher than this. And this is the all-time low. It's never been lower than that. So first thing I'm going to do, I want to make sure I know it's what kind of line it is, and I'm not going to put it exactly where it is. A lot of times I want to make sure I know what it is. So if I want to know it's a monthly level and an all-time high or low, I just make it a big thick dashed line. Now up here, remember when I talked about zones? This is the extreme high and low. So now I would make this a zone because why? It has wicks on it. So I go from the base to the top wick, and then I'm going to extend it. So now it's extended, okay? So now, if price ever gets back up to that level, then I know that that's the all-time high and a super strong resistance level. And I want to make sure I know that's a monthly zone, right? So I got to make the border thick and make it dashed. So I want to always know that that's an all-time high and low. And you really want to do that on all your charts, and you want to have the all-time high and the all-time low on every chart. Now, a lot of times FXCM keeps messing up my charts and I have to redo stuff, so I don't always have my levels on there, but they're good to know, and especially when price is getting near an all-time low or high, because these all-time highs and all-time lows are going to be major support and resistance levels, major. So you want to have them on your chart, and you're going to be able to trade off of those. A lot of times they'll be double bottoms and double tops. All right. So when we start talking more about chart patterns, we'll talk about the double bottom and the double top a little more. And this is going to be another zone, really. I would have made this a zone. It has a big enough wick. And when you take this down to a smaller time frame, so let's see. I'm going to show you how that would look. I'm going to put just two. Actually, let's make it a zone so you guys could really see how it's going to look. So if this is the zone and it's a monthly, we put that on the chart. And we go like this. We'll extend it. And we'll say OK. So now when we go to the daily, let's see if we could see that level. What I'm going to do is this. We're going to. So now let's look at that level. If price ever gets back to that level. Okay, so here's that level. So if price ever gets back to that level, look how big of a zone it is. Let's see how many pips it is. It looks small from the monthly, right? So you know basically almost 200 pip zone. That price could, this is the all-time low right here, but this was the base of that candle. So price can fall inside that zone. Maybe price falls just to this level, or maybe to this level, or comes all the way to the zone, and even penetrates the zone but comes back up. This is going to be hard to trade, so you want to know that price could either stop here or here, and this is the whole area that is the monthly all-time low. It's a good thing to know on your charts, and then you'll just monitor price as it's inside that zone. Then maybe it's inside the zone, and if it bounces off of the level, then we could really take a great trade off of it. All right, because we know that the market's never been lower than this. So we would be able to use this level as an entry area to get into the market. All right, so that's looking at your support and resistance levels and looking at how to draw them. So now you should know how to draw your levels. Let's zoom back, auto scale. You should know how to draw your levels. You should know that basically you're going to start from your left and go to your right. You don't want a ton of levels, so I'm going to show you what too many levels looks like. All right, so if I'm trading a daily time frame, let's go to the 4-hour. Let's say we're trading a 4-hour time frame, and all these aren't going to be true good levels. I'm just going to mark levels because now we're trading a 4-hour time frame. So let's mark up some levels that we see. Maybe we call this a level, okay, and then we call this a level, and then we got a level here, and we got a level here, and then here, and then here. Okay, I don't mind that 4-hour time frame because you can see these are strong levels. Support, resistance, support, kind of broke through and wasn't really strong here. I might take that off of my chart. Broke through, wasn't really strong there. But then some people will start adding more levels. Okay, here's a level. We'll put that. This might be a level here. Then we got a level here. Now support and resistance is not relevant for you. You've got too much on your chart, okay? You see that? You don't need all those. You don't need all these levels. I mean, if you want to trade for a couple seconds, yeah, maybe a minute or two, you get a couple good trades. And I'm not being real, but, you know, this is really close. Let's see how many pips this is anyway. 34 to there, right? And then another 37 here. And then 53 there. You don't want that kind of stuff. You want to have these at least 50 or more pips away from each other. So I wouldn't even put in any of these really. I would base everything off of the daily time frame, as I said, and that way when I bring them closer and bring it down to the 4-hour time frame, I don't have tons of lines like this. This is exactly what you don't want on your charts. All right, so that's looking at your support and resistance levels. So when you're looking at these support and resistance levels, another thing that you want to keep in mind. All right, and we'll keep some of these levels. Let's get rid of some of them. All right, so if you were trading, and this is a bearish move to the downside, all right, let's remove some of these levels. So the market's moving to the downside. If you're trading to the downside, you don't trade support at all. You trade resistance, because if you trade support, then that means you're trading when the market breaks through that level. So what you want to do now is trade the resistance of the level. So when the market does go through the level and then pulls back to the level, you trade it to the downside. Here, the market broke this level right here, and even this one. The market breaks this level, comes back to this level, forms a big wick that made a big zone. This could have been a zone too, all right, but I wouldn't have made that zone on my chart. It has to be an extreme where it's going to be a zone. You don't want to have things on your left to make a zone. That's also something you want to talk about. You want to know that when I make a zone, you don't want any candles on my left really until they're way back there. You don't want anything immediately to my left like this, all right. But anyway, you're trading to the downside. When you're trading the market with support and resistance, looking at these levels, you're going to really be trading pullback. So you pull back and trade the resistance. You don't trade this support level. Now, if you're sideways and you're trading a range, you could trade support and resistance. But if the market's trending to the downside, so we'll say this is trending to the downside. The market's trending to the downside. Okay? We want to trade every bounce of resistance and forget about support. All right? So the market comes back, bounces off of resistance, and we don't worry about support. The market breaks, comes back to resistance, and we trade these resistance levels. The market comes back, bounces off of resistance. We're not trading this support down here. And then the market comes back, didn't really find resistance, but again, you got to remember it's an area, so is that too far away? Yes, probably to me it is. And that's how you want to trade. You don't want to trade in the market coming to the downside support. So if the market was going to the upside, you would do the exact same thing. You would trade when the market's moving to the upside. Now you want to trade pullbacks to support. All right, so it would be much like this. And I'm going to do it really quickly here. Every time the market breaks this level, this support level, the market's moving higher, you want to move it when the market pulls back to that support and then trade it. Now here we didn't pull back to any levels and we just kept moving to the upside. All right, so you wait till the market comes back to your support level to trade when you're moving to the upside. So the rule is when you're trading to the upside, you only want to trade support. So you're going to trade support bounces. And when you're trading to the downside, you only want to trade resistance. So you're going to trade resistance bounces. All right, so that's a strong rule to remember. All right, so let's get back to learning more about support and resistance, looking at some types of support and resistance called static and dynamic support and resistance. Types of support and resistance. There are two main types of support and resistance known as static and dynamic. Static support and resistance levels are levels that remain the same and never change, such as horizontal levels, which include range levels, swing points, fractal levels, pivot points, and Fibonacci retracement levels, and triangle patterns, to name a few. Dynamic support and resistance levels are levels that are constantly changing and recalculating with price. Most noted examples of dynamic support and resistance is a moving average, but another example would come from the Ichimoku system in the form of the Kumo cloud, the Kijun-sen, and the Tenkan-sen. So let's start off looking at the examples of static support and resistance. Horizontal levels as static support and resistance levels. The most common static support and resistance levels are the horizontal levels that you draw on your chart. In reality, they do not move with price because once a level is a level, it doesn't change unless you move the level. Price will create a new level of support and resistance, at which point we would have to make a new line. And here you see the horizontal support and resistance levels that you draw on your chart. They never move unless you move them. Price doesn't change these levels. We may get a new support and resistance level, but the level that is developed never changes. Here you see a trend line as static support and resistance level. Trend lines are another form of static support and resistance levels, as again, they do not move or change unless you change them yourself. When drawing trend lines, use the fractal points to connect to each other, and this will help you to have the best trend lines. So there you see I've connected a fractal point here, a fractal point here, fractal bottom here, and that's your perfect trend line. Fractals will do everything for you. Fibonacci retracement levels as static support and resistance. Here we can see that Fibonacci retracement levels can hold as support and resistance levels. On this example, we see that price is finding support at the 23.6 retracement level. For us to enter a trade here, we would look for a price action entry from the setups that we have learned in the candlestick module. So you can see we're using this Fibonacci retracement levels as levels of support and resistance. Basically, we're using them here as support because we're looking for price moves up, retraces. We can retrace the 23.6, 38.2, 50, 61.8, and 78.6. We look for a bounce off of any of these levels. Mainly, I would use 23.6 to 61.8, and I would look for a bounce off of these levels. And all you look for is your price action entry levels, as you learned from your first module with candlesticks. Here we have pivot point levels as static support and resistance. In this example, we are using the floor pivots as support and resistance levels. Taken from Investopedia, which states, originally employed by floor traders on equity and futures exchanges, Pivot points have proved exceptionally useful in the FX market. In fact, the projected support and resistance generated by pivot points tends to work better in FX, especially with the most liquid pairs, because the large size of the market guards against market manipulation. In essence, the FX market adheres to technical principles such as support and resistance better than less liquid markets. So here you see I have pivot points drawn in. These are my daily pivots from the floor pivots, and this is going to be my daily pivots, and I'm using a 4-hour time frame to trade these levels. Therefore, I really don't have to draw any horizontal support and resistance levels in, because I can just use these daily pivot levels. Here you can see the daily pivot of this gray line here, which is about 108, 153, and then the rest you would see are 1, 2, 3. These would be your resistance points, and that's 1, 2, and 3. These would be your support points based off of pivot points. Now we can see moving averages as levels of dynamic support and resistance. So we covered static support and resistance. Now we're looking at dynamic support and resistance. And moving average are one of the more popular forms of dynamic support and resistance. In the chart above, we are using a 50 SMA, simple moving average, which is the yellow line. This yellowish line here is your 50 SMA. You can see at the designated points with the red arrows how price honored the moving average as a level of resistance and price fell to the downside. So therefore you could use the moving average as a support and resistance level. Here you could see again the same moving average. Using that same moving average, we're looking at it as support levels. From the first red arrow to the left, we can see even a nice pin bar rejection on that first level. So you have a pin bar rejection, and a good trade. All right, so you found your support level at the 50 SMA, then you found your entry based off of your candlestick analysis, which this case was a rejection of the 50 SMA, and then a trade to the upside. The next arrow represents a bullish engulfing pattern. You can see a big bullish engulfing pattern. I don't really like to use these smaller candles, but still we had a big green candle bounce off of support after we had bears in the market, finally getting bulls to come into the market with a very strong candle, and that indicated that the market was moving higher off of that support level of the 50 moving average. And then finally we have inside trading, with the market trading with 3 candles inside of this candle here, and then finally we break out and start moving to the upside. Looks like maybe price was starting to decline here and the trend was getting weaker. But you can use your simple moving averages as levels of dynamic support and resistance. And then finally, the last level of dynamic support and resistance that I'm going to look at is using Ichimoku as levels of dynamic support and resistance. Using Ichimoku system as levels of dynamic support and resistance, basically because it's like a moving average system, but based on the average of the high and low over a given period of time instead of the close. So we're using the average instead of the close, and it's still pretty much a moving average based off of what I've said, the average of the high and low. So where the red arrows are shows where price respected the Kijun-sen and the Tenkan-sen, which would both be levels of dynamic support and resistance, and we would trade them just as we would any other support and resistance level. So you can see we have bounces off of the Kijun-sen here with these 3 arrows here. We have a Tenkan-sen bounce here, and then another bounce off of your Kijun-sen. These are basically moving average, and you're bouncing off of those much like you would the 50 moving average or the 100 period moving average or the 150 EMA, all kinds of levels that you can use. So we want to know the strength of a level. We want to know if the level is strong, if the level is going to hold. And there's ways to determine the strength of a level. One way that we determine the strength of a level is in how many times the level is tested. The more times the level is tested shows the strength of that level. If a level was tested 3 to 4 times, we would consider this level to be a strong level. But it is also true that the more the level is tested, the weaker it becomes, because every time a support level is tested, more buying pressure is absorbed by the market until eventually the selling pressure outweighs the buying pressure, and then the level is eventually violated, causing a breakout of the level. And the same would hold true on a resistance point, where instead of absorbing all of the buying pressure and all the buying going on, you would absorb all of the selling pressure. All right. So the selling would outweigh the buying, and that would cause the market to drop. And then another way to determine the strength of a market, another way to determine the strength of the level is its failure attempts. How many attempts does it fail to break through that level? You can see here we failed at many attempts to break through, and we pretty much laid flat here, and then finally we couldn't break through, so the market just moved higher. When you look at a level of support and resistance, take notice of how many times price attempts to violate the level but fails. These are considered failure attempts, and when price cannot violate the level after so many attempts, this tells us that the level is a strong level. Look at the chart above and you see areas where price failed to violate after many attempts and then moved strongly away from the level. You could see that here. You could see that same thing here. We ranged and hit sideways and kept bouncing off of that level until finally, look at the strong moves away from that level. Another way to determine is how fast the price moves away from a level. Will also help us to determine the strength of that level. The faster price leaves a level, the greater the disequilibrium of supply and demand at that level. So basically, when you have a level and the market bounces off of that level and moves away rapidly and quickly, that's because there was so much buying pressure at that level, or imbalance of supply and demand, and the market just took off from that level because all those buy orders were absorbed quickly because there were so many of them at that point, and the market just took off. If you had an equal balance, pretty much the market would hang at that point for a while until finally one of the buyers or sellers overwhelmed each other. So basically you're looking at this support level, and you could see there would be, for the market not to move and stay at this point, there would have to be a pretty much balanced, equalized buying and selling pressure here. So eventually one will outweigh the other. So say you had maybe 100 each here, just given small numbers to be more easy, and then finally you had maybe more buyers come into the market, so now the buyers outweigh 140 to maybe 100. Now the market's going to start moving higher. But if all of a sudden that market all of a sudden sees 250 to 100, now it's going to really move even faster. That lets you know how much power is in that level, because how many institutional traders want to move that level. So on the chart above, we see an imbalance between supply and demand, as the demand at this level outweighs the supply, therefore causing the strong move away from the support level. Here again you can see price wastes no time moving away from this resistance level. At this point there was so much supply that the market just dropped so hard. So there was way more selling pressure than there was buying pressure here. Way more selling orders to be absorbed than there were buying orders, and the market just dropped to the downside. And those sell orders could have came from buyers who were in the market or buyers who were waiting. You know, it could have been buyers. It could have been buyers that were taking profit off of these levels here, the levels here where they were moving to the upside with this little trend here. And then they started to take profit. They became sellers. And then you also had sellers who were at this level. So that caused the imbalance of supply and demand, and supply overcame demand, and the market dropped to the downside quickly. Okay, and another determining factor in determining the strength of a level is to find a level that is both a support and a resistance level. So here we can see a level that was first resistance. Back here we had resistance, but when the level was violated and then price fell back down to the level, this level became support. So we violated the level and fell back to the level, and we were now support. All right, so resistance and support. A lot of times you'll find a level where maybe that level is just a support level or just a resistance level. It might not be as strong as a level where that level was once resistance and support both. All right, So when we see this, we can know that if price return back to this level, we can plan for the level to possibly hold support and rally from that level as shown in our next slide. You could see that price bounced off of this level and then took off because it was a strong level based off of being resistance and then support here. So that let us know that the level was strong. And knowing this, we could be prepared to help us define high probability trades because we know that this level could be strong based off of it being resistance and then support again. And then once we come back to that support level again, we would expect that market to hold and do the same thing that it did before. So expect support and resistance to do what it's done prior. So if this was resistance, expect it here to be resistance until violated. All right, and then a lot of times violated is going to be violated with a big candle like it is here. So remember this fact, and then the market takes off and drops back to the downside. So in conclusion, as you can see, support and resistance should be a major aspect of your trading plan. If you are not using support and resistance, then you are not finding high probability trade setups, and that is true. I think I will close out with some chart time, and then hopefully you will understand how to find and draw support and resistance levels on your charts. All right, so we're going to conclude with some of these charts, and I wanted to just make sure that you guys were understanding how to draw support and resistance, touch on a couple other aspects that I haven't touched on, and make sure we're clear here. Now, one thing we're not going to do or learn right now is how to trade these levels, all right? We want to know these levels and understand these levels, but when we go to our module, putting it all together, that's when we'll put everything together with the support and resistance, the candlestick analysis, market structure, and we'll put that all together and show you exactly how to be trading at support and resistance levels, using market structure, so forth. All right, but right now we want to understand support and resistance, understand how to draw it, understand where it is, and how to know if it's a strong level or a weak level, and if it's a level that we should be trading. If we know it's a strong level, then maybe it's a level we can trade and we would think about trading. Now, if we didn't know if it was strong, we didn't understand or quite know or didn't feel that it was a strong level, maybe we don't make that trade. But when you have the idea and all the things show you that it's a strong level, then that gives you a good reason to enter the market at that level and gives you a high probability trade setup. All right, so when you know that the level's strong, it's going to add to your probabilities. But when you're not sure of a level, maybe you don't trade that level, or maybe that level fails and you lose the trade. But we're looking at the Euro Pound daily time frame. Now, I told you I draw from left to right, but also I can draw from right to left. I told you I draw from right to left, but I can also draw from left to right because I'm going back to this point here, right? And I have to make sure that levels have been touched before. So what I'm going to do, first I'm going to draw this level on my chart. And now I'm going to make this a zone, because let's go over that real quick. Hold on there. This is going to be a zone because you have this candle here with a good wick. So it's a nice wick for a daily time frame. So I'm going to make that a zone. It's not super big. So what I'm going to do is this. And then I'm going to extend it, okay? So I go to 2000, and then I'll go to 2020 with it. Okay, and then so it'll extend. So now when I look at it back here, I want to make sure it touched some things. So now also I see that this wick here, the body was down here, so I would probably want to move that zone down. So now that zone level is going to be 74,362. So I'm going to lower it. $74,362, right? Okay, so now you see I covered this wick and this wick here. Okay, so that gave me this zone here, and you could see what's happening at that zone. And then you could see here, so now to my left, I don't see much on my left, and I'm not going to go back that far. And you can see I already had a year of time on my chart at least. So from here, I'm just about 2 years now. But here at least this is a good year of time. Now I know when the market comes back to this point, it might be a support level because we had tested it here and here, 2 levels. Now it wasn't a level of support and resistance. I mean, I don't see it here really. I mean, it's close. Okay, so that's how I draw zones. So again, I would draw another zone here. Now this is not a tested zone, so that's the problem here. So I want to see if it's tested. I could extend it to see if it has any relevance anywhere else. So it's a really small zone. You don't have to draw candles with small zones like that. Let's take, for instance, it was a wick like this. We could do it. But we don't want to do it with candles to our left, our right. So we have candles to our right. We don't want that. We want this to be the high. All right. So if these candles dropped and went to the downside, you could do it. Same thing with this level here. You would be able to do it here. I pretty much want to make this a zone now, because now I'm going to just draw support and resistance levels. I'm not going to draw zones based off of these wicks, because the wicks have to be highs like this. These are highs in the middle here. This is a high and this is a high. There's nothing really on the left of it for a good while, nothing on the right for a good while. All right. So if you were looking at that, you would see there's nothing immediately to the left of it. But then you get something here, and that was support here, and you could see, and then it was resistance. So I don't mind putting that level. And here it was just a resistance level, and it dropped, and then the market went right through it. It tried to hold here. All right. So now let's just draw some levels on our charts and just see what we have. All right. So now price again is between points. So I want to have some good levels on my chart. So I'm going to draw this level. And notice I'm putting just my single levels at the bodies, because now I don't want a candle to close above my level. If a candle closes above my level, then it's starting to be violated, because no bodies have closed above my level right here. So let's see if there's anything to our left. And to our left is quite a little bit of relevance. I mean, because it would be right here. I'm going to adjust it. And then you could see we didn't quite hit there. And then back here it wasn't really relevant. So this level may not be a strong level. So let's draw some more levels on our charts. So I'm going to draw these levels here. You could see where I'm hitting resistance here. A little bit of support here and then resistance here. I know this is a strong level. When the market gets up to here, it may fail. All right, so let's see if there's anything more to the left of it. That'll give us an idea. And it looks like the market kind of ran through this level a little bit. I'm going to keep this level because I like what it's done up here. All right, and then I'm going to draw another level. My next level is going to be here. Okay, so I started from this point now. I started here because I looked here. I looked at 3 points. I saw this point, and I started from left to right with this. I didn't start from here. I mean, I could have, but I started from here because I saw these 2 levels holding here. So this was resistance here, and then it was support here. Then the market violated it and then violated it, but I'm still going to hold it. If it violates it again, I'll probably take it off of my chart because it's not honoring it here. It honored it back here and here, and then it hasn't really honored it here. So if the market comes back and does this, if the market comes back and honors it, then I'll keep it on my chart. But if it comes back and just violates, then I'll take that level off my chart because it's no longer a valid level. You could take it off of your chart. All right, so I have those levels. I have the market between my levels. Now let's mark some other levels really quickly. So I marked this bottom here, and the reason I'm going to mark it is because it's almost hitting on this point, but I'm resistance here, support here. Let's see what it looks like to the left. And then it has a nice level here. Now if I moved up to that point, I don't like what it does between here, but then it is nice here. So I probably will leave that level. You see how I adjusted it based off of what I saw to my left. What I saw to my left was this. I was able to make this point a support here in a resistance here, and then when I came all the way over here, where I was starting to mark wasn't relevant back here, and the market just cut through this level really. But then the market really honored this level over here. So I'm going to leave it on my chart. And then finally, I don't really need to mark anything in between this area because we're so far away from that level. So what I'm going to do is just mark a bottom down here. So I'll mark a bottom level and then see if it's been tested. And it's far over there, so I'm not going to be able to see anything over there. So let's see if we could get a couple more hits on here. Better like this. Alright, so that would be a little bit better. You got a hit here, a couple hits there, and then here. So I would leave that, and then maybe I could even make another level, make it a zone. If I wanted to, I could make it a zone. Alright, but that's showing me that price was inside that level before. So I know that would be a level. So maybe you mark another line there just to let you know that. Maybe you change it up to be something like this. Then you know that it's there's a reason you dashed it. Alright, so you have to go back and look at your chart and figure out why you dashed it, or write it down, or maybe just make it a zone like I did here, and then you won't even have to think about that. Alright, so that's a level we could make a zone because it's on the bottom, or it's an extreme. It has to be an extreme like up here. You don't do zones like this. You wouldn't make this a zone. You wouldn't move this and put a zone in here somewhere. You know, that wouldn't be a zone. I mean, that looks like a nice level here, but you don't want price running through your zone. You want your zone to be like the extreme. So you would have a bottom and a top, and then if the zone gets violated so many times, I get rid of it. All right? So that's looking at euro pound, a couple things that we draw here. So let's go to the euro yen and look at that. There's a couple things we can see on there. And so I already have these drawn in. I have a support level down here on the bottom. And then now I'm going to take these off and show you what I'm exactly doing. This is a trend line that I drew. So I want to draw trend lines based off of using the fractal level. So you can see this fractal level. And I'm going to draw my trend lines like that. Now let's extend this to the bottom. And when I do that, you can see it's like a triangle. I want to make sure we're hitting these fractal levels. Okay, so basically you could see I hit this fractal level, hit here. I didn't really want it to stay on the top. I hit here, and hit here. So this is a nice fractal level, but now it hasn't hit in a while, and it looks like it's getting smaller. So I sometime would put another level, another trend line here, based off of my fractal levels. And I can trade both levels, because I can trade a bounce off of this level if I see price action telling me, because we're going to be trading to the downside. Remember, we're trading resistance when the market's moving to the downside. And then if the market moves up to this point, then I look to sell it again. Now, if the market violates these trend lines, then I'm going to start looking for the move to the upside. I'm going to make a trend line to the upside. And I'm going to start trading to the upside and look at my fractal levels and how I'm violating those levels. So that's how you want to make sure you're drawing your trend lines. You want to be drawing based off of hitting fractal levels. You want to let the fractal levels tell you. Now, we just use swing points, most people do, but fractal levels are more precise. You have an exact level where you want to put your line. Okay, and then you could see I drew two lines here. All right, so that's what we're going to do for trend lines and how to draw your trend lines using support and resistance from fractals. And so let's look at one more chart, which will be the Euro New Zealand dollar. Daily time frame here. And now I want to show you a zone, another zone. Now there's nothing exactly to the immediate left of me because there is back here, and there's nothing to the right of me, and I'm drawing a zone not from my immediate right or my immediate left. I'm drawing it from the middle of this chart right here. And how much time do I have? Now I have 1 year's time here. I'm still going to draw this zone, and I'm not really considering what's over here. I'm considering what's happened from these 2 points. This was a strong resistance point. So I know if the market comes back to it, it may be strong again. The market's kind of sideways. Now, first of all, I could also say that the market's starting to trend to the downside. Maybe we have what you would call a triangle, right? So let's do this. I make zones on triangles, on trend lines. So we're not going to extend this forever. But that trend line is based off of these wicks. But look how big these wicks are here. So price may never come back up to that point. So if I have wicks like that, I want to just make this into a zone. I want to hit the bodies now. So now I'm going to hit the bodies. And I'll try to straighten it out. Okay, so now it's a little zone here. And I know that if price gets into this zone here, how to trade it. All right, because I'm going to trade it much like I would just a regular horizontal fractal zone. And we'll talk about that again in our final module of putting it all together. But that's not what I really wanted to show you. Now, again, I wouldn't draw this. I could draw this level here as a zone. But the reason I'm not is because I have a zone up here that I want to use. Now, price may never reach it because I showed you it's kind of like a descending triangle pattern maybe. And we're going to get into patterns also when we do our module on price patterns, which will be pretty interesting. But I'm going to draw this zone right here. And I don't have to extend it to the left because I'm not worried about what's happening on my left now. What I'm worried about is what's happening from these points over. I can see that this was already a strong resistance point. Now I want to see when the market gets back to it. So I have that extended, and if the market continues to move farther without coming up to that point, I'll just move it out more. So we want to see what happens when the market gets there. Now if we did extend this, what would it look like to our left? Pretty much look like that. You can see it would be pretty much a resistance point here, support here. This whole zone would have been strong. You could see that. So this zone is a nice zone. This is one that you should look at on your charts. Put that on your charts, and then when price gets there, you know how to trade it. Now, we didn't really learn how to trade zones yet, but you will learn, and you'll be able to trade this whole zone and limit your risk of this zone. This zone is a big risk because the price can move anywhere from this point to here. So your stop loss has to be just that big also. So what's going to happen here is we're going to learn how to cut that risk in half. And we've already learned it, but some of you have not learned it who haven't taken the Ichimoku course. So you'll learn that when we put it all together. We'll do everything, all of our trading analysis and everything. All right. So finally, I make another line, and I had two lines down here. And the reason I have two is because, one, I like this level right here, and then I like what we had bouncing off of here. And then this was an extreme low. So I always put levels where an extreme low is. And you could even have made this a zone because look at the wick here, right? So watch. If we just put it at this level here, if we just put a line at this level here, right? Because there's the body. There is a line down here where the market has been before, right? So should we not honor that level just because we're using the bodies here? We know that price could drop into that zone. So in order to get a better trade, we make this a zone. It's not a big zone, and it's a nice size zone for a very good trade. So now when price comes in that zone, again, if price falls to the bottom of this zone, and we had an entry up here, we can move our entry and take the entry and drop the stop loss a little lower, limiting our risk to whatever we desire, looking for a nice price action move here and then the market to move higher. All right, so that's what I really wanted to look at, showing you how to draw the zones. Now, here's a big zone. This is a zone I wouldn't even draw on my chart. It's excessively big. Let's see if it's over 100 pips. Looks like it's really big. Yeah, it's like 400, 500 and something pips. It's something that I wouldn't even draw on my chart. What I would do is this. it is a support and resistance level at one point. All right, so I would definitely draw the levels here where we're bouncing, and then I would draw this on its own. I would make a note about this level. Maybe I make this a dashed line, okay, or change it into a green line. That way I know that it's not a tested line yet. So let's see if it's tested over here. And it doesn't look like it. So we can't really get a feel. It doesn't look like it's tested. And actually it has been tested way back here. And you can see it's a little bit of support and resistance back here. And the market went through it a couple times here. And then our level here was a nice level back here. So we're going to keep both levels, because if the market ever gets to these points, we want to look at them as resistance points. All right, that's definite resistance point. And then this here, we're leaving it because this was a big news event. And why did the market stop at that point? So we want to see if that level holds. I've seen these levels hold before. All right, so that's support and resistance. Let's touch on a few things that we want to keep our mind on. Remember, mainly when the market's trending to the downside, you want to trade off of bounces off of resistance. When the market's moving to the upside, you want to trade off of bounces off of support. All right, so those will be pullback trades, and then you trade those. So even if you were trading, even if you had Fibonacci extensions on your chart, or Fibonacci retracements rather, you would trade those levels based off of bounces of support and resistance, okay? So those would be support and resistance bounces. It wouldn't be you just trade those levels, breaks, or whatever. Pivot points going to be the same thing. Everything that I showed you, you're going to follow that same example, that same rule. All right, and then the next thing is going to be, look from your right to your left to find strong support and resistance levels that have been valid in the past. Have at least a year's data on your chart and use the daily time frame. Those are the main rules that we want to have on our mind. And then you want to try to draw zones where there are extended wicks. All right, but you don't want anything to be on your immediate left or right when you draw a zone. All right. So that's basically the rules pretty much that you want to adhere to. And other than that, guys, this is going to conclude our support and resistance module. We're going to touch more on support and resistance when we talk about putting it all together, because then you will learn exactly how to trade all aspects of support and resistance and trade those zones. But basically, guys, it's going to be looking for price action entries at these levels. Once you see the levels held and rejected or whatever, that's when you make your trade. Rejections of levels are going to be how we're going to get into the market mainly, where you see a big pin bar or big wick rejection like you see here, or you're going to see, inside out trading like you see here, or you're going to see something, something that we've already learned and at that level to trade that level. Everything that at this level, you could see that we've learned already. This is inside trading, and then the market breaks out at this support level and the market moves higher. I could call it 3 inside up, all right? We have inside trading here. The market breaks and moves to the upside. We have inside trading here. Then the market moves to the upside. It's the same thing everywhere we look on the chart, all right? So hopefully that helps you guys, and that's going to be the end of this module. So we'll move on and continue. So guys, just keep thinking and trading and studying your charts. Keep looking at your charts, studying your charts, looking for support and resistance levels, and you'll get good at drawing these levels and knowing which levels are relevant. All right, so that's going to conclude us. So we're done for this, and we'll see you at the next module. Good luck on your quiz.